from Confidely Partners. We represent the investor relation for Namo eWaste Management Ltd. I warmly welcome you all to Namo eWaste Management H1 FY26 earning conference call. The company is today represented by Mr. Akshay Jain, Promoter and Managing Director, Mr. Sanjeev Srivastava, Chief Executive Officer. Now I would like to hand over the call to Mr. Akshay Jain for his opening remarks. Thank you, and over to you, sir.
Thank you so much. A very good afternoon, everyone, and a very warm welcome to all our investors, analysts, and stakeholders joining us today. For those attending our call for the first time, would like to brief you about the company. Namo eWaste Management Limited is one of India's leading formal recyclers focused on the sustainable management of electronic and battery waste. Since our inception in 2014, we built a robust nationwide ecosystem integrating collection, dismantling, recycling, and recovery of valuable materials, fully aligned with India's circular economy vision and ESG commitments. The first half of the FY26 has been a defining phase in our growth journey, marked by a 66% EBITDA growth, 272 basis points margin expansion, and a 31% increase in revenue, along with a robust 94% year-on-year rise in PBT, driven by operational efficiencies, scale benefits, and disciplined cost management. Most importantly, we achieved positive operational cash flow, which signifies a critical inflection point in Namo's financial evolution. When we set our goal to sustain a 40 to 50% compounded annual growth rate over the medium term, it was with a clear focus on both scale and profitability. I'm pleased to share that on a consolidated basis, we are tracking strongly within that range, reaffirming our ability to execute consistently against the guidance we have shared with the market. A key highlight of this period has been the successful commissioning of our 12,400 metric tons per annum lithium-ion battery recycling facility and refurbishment facility at Nashik, which commenced operations in July 2025. We are currently operating at around 60% utilization levels as we progressively scale up throughout. The focus remains on building strong sourcing networks and OEM partnerships to secure high-quality lithium-ion battery scrap for producing premium quality black mass and refurbished cells. We have also set up an advanced ICP MS laboratory for testing the percentage of critical metals present in black mass, ensuring stringent quality control and high-quality output. At this stage, we are recovering copper, iron, aluminum, and black mass from the facility, and we are exploring all the possible global technology tie-ups to set up a hydrometallurgical recovery plant for extraction of lithium, cobalt, nickel, and manganese, these kind of rare earth metals, which is again aligning with India's critical minerals recycling mission, for which the government is very progressively working towards. Our fifth e-waste recycling plant in Hyderabad is under construction and is expected to be ready for operations by H2 FY26. This 25,000 metric tons per annum facility will enhance our total installed capacity to 68,000 metric tons per annum and establish a strong presence in South India, opening new opportunities in ITAT services while reducing logistic costs. The logistic costs have in the past played a significant role in ensuring our PL, and we are trying to reduce our logistic costs by taking our operations to different parts of India, and now south of India being our primary focus. While our top line growth has been strong, our strategy has always been centered on enhancing operational efficiency and profitability. We continue to focus on throughout optimization, automation, and process re-engineering to expand our EBITDA and PAT margins sustainably. Our financial discipline, efficient working capital management, and cost rationalization efforts have translated into tangible improvements in cash flow and margin structure, creating a solid foundation for scalable, value-accretive growth. As India's regulatory environment evolves around the e-waste and battery management rules 2022, the formal recycling sector is entering a structural growth phase. With 3.2 million tons of e-waste generated annually, expected to reach 5 million tons by 2030, the demand for organized recyclers like Namo continues to accelerate. We stand at the forefront of this transformation, backed by a diversified client base, a women-led workforce, and a strong ESG ethos. Our execution discipline, operational scalability, and focus on stakeholder value creation gives us the confidence to sustain our 40 to 50% CAGR growth trajectory in the years ahead. Thank you all for the continued trust and support as we build Namo eWaste into a national leader in responsible and profitable waste management. Before we move ahead, I would like to take this opportunity to extend my sincere gratitude to all our investors, partners, employees, and stakeholders for their continued trust and support. Your belief in Namo's mission and growth strategy continues to inspire us to deliver consistent, responsible, and long-term value. With that, I now open the floor for any questions that you may have. Thank you.
Participants are requested to raise their hands for their question using the reaction tab. Also, one can request the question in the question and answer box. We have Mr. Rahul Singhania. Sir, you may unmute and introduce yourself. Next.
Hello. Hello.
Yes, sir, you're audible.
Yes. I wanted to ask a couple of questions. Manufacturers or battery OEMs for recycle partnerships, and would these be structured as long-term contracts?
Rahulji, we couldn't get your question very clearly. From what I heard, that what you are asking is that whether we are getting into long-term agreements for battery procurement. Yes, we are. There are short-term and long-term agreements that work simultaneously. Some of the organizations, they get into a short-term contract, whereas most of them are looking at above 1 year contracts.
Okay. And sir, as this ESG compliance becomes more stringent, so how do we plan to balance the costs, जो भी इससे incremental cost associated होंगे, and maintaining the competitiveness?
Sir, we are actually not incurring any cost in meeting the ESG compliances. We are a credit positive company, whether it comes to providing metal credits for EPR or whether it comes to even selling out carbon credits in case if that is required. So this ESG compliance is not a direct cost on us as an organization.
Okay, understood.
We are helping the other organizations to actually meet their ESG compliance.
Okay. Yeah, I'll just join back the queue.
Thank you, sir. Next, we have Mr. Harshil Bhayani. Sir, you may unmute and introduce yourself.
Hello, can you hear me?
Yes, Harshil.
Yes.
Yeah, thank you for the opportunity. So my question is on EBITDA. So this half year we have generated EBITDA margin greater than the historical period. So is this EBITDA margin sustainable for our projections? What your guidance would be?
Akshay, I'm taking this. Yes, I think if you recollect in the last call also we had mentioned that our EBITDA is only going to improve because we are continuously focusing on it. And if you look at it last time in the first half year, we had not provided for tax. 11 September we had got listed, And after September result, somehow we had the understanding that all the marketing expenses can be, prorata on a prorata basis can be, accounted for next 5 years. So in September, we had not made any provision for the tax as such. Later on, we realized that it is not, when we took the legal opinion, the tax was to be collected for the whole year in the second half. That's reason EBITDA had fallen. But otherwise, we have always said in the previous commentaries that EBITDA margin is going to be around 12 to 15%, and we are continuously working. It has improved, and we see, a bit, improvement on that further going forward.
Understand. Okay, thank you. And second question is, so around what percentage of our revenue would in this half year would be from the Nashik lithium plant? And what would be the optimum we can project from Nashik plant and Hyderabad plant going forward once it is optimized for the full year?
Akshay, you can take this.
Yeah, so right now, I think it is about only 6% of the revenue, as we have commenced operations in June only. So, and this year we are looking to, achieve a minimum 15% split in the revenue from battery recycling plant.
Okay, so once it is stabilized and operational for the full year, can you give an absolute amount or number what revenue can be generated from lithium and Hyderabad plant? So we know that these three plants, which is there historically, can generate this much revenue or about 20% from that. For a projection, we want if you can help with the absolute number which the Nashik plant and the Hyderabad plant can generate at optimal capacity.
Yeah, Akshay, I'm responding.
Please.
So,
Go.
Harshil, actually, me and Akshay both are in different places. In fact, I am out of country and Akshay is there, in Hyderabad. So that's the reason we are not able to communicate directly. We are talking through you guys only. So this 12,600 plant, in Nashik has a capacity to give us at a 60%, utilization, revenue opportunity of close to about 180 to 200 crores. So that is what we are looking at, in next year when we operate it fully. And Hyderabad plant, we are looking at about 25,000 metric ton. So that we are looking about 30 to 40 crore, delta from there. And then these current three facilities will continue to grow by about 30 to 35% in normal course.
Okay, so but Hyderabad plant is around 25,000 metric tons per annum, and only 30 to 40 crores isn't a less number.
So there's, you need to understand that there's a huge difference between battery and pricing and the e-waste pricing. Typical e-waste pricing would be, about 15 to 20 rupees per kg, whereas the battery comes to around 300 rupees per kg. So the volumes, the capacity might be more, but the volume contribution would be more in battery because that's expensive. For example, black mass currently gets sold at about 600 rupees per kg. Correct. So that kind of dynamics will come into, and also next year would be our first year of operation from Hyderabad, and maybe subsequent years it will again further go up.
Okay, understood. Okay, and is the gross margin similar in lithium plant, or is there any difference between? I believe in e-waste we have around 15 or 20% gross margin. In lithium, is it similar, or how is it?
Yes, similar kind of margin, around 18 to 20% margins.
Okay, so blended, the EBITDA would be the same, irrespective of whether we are doing e-waste, waste of e-waste or lithium. Okay, and the last question from my side is in H1 26, is there any material related party transaction? So I believe in annual report of 25, you had mentioned about related party transaction with Vardhaman Sales Agency and Vardhaman Recycling Agency. Is there any similar in H1?
Yeah. So we are going to have similar transactions with Vardhaman for this year only. As Vardhaman was working as a PRO company earlier. Then the e-waste rules got changed, and then the significance of PROs from the rules were taken out. So now Vardhaman was working so we have a client who gives us about 50 to 60% of the EPR business every year, and it's on top MNC. Vardhaman is a registered vendor in that MNC, which gets the allocation of about 50% of the business from the MNC. So Namo is working as a recycler with Vardhman for that company. And now, Vardhman has established relationship with that company, which is getting over now after 5 years. And now we will be migrating to Namo eWaste next year. So that related party transaction would be completely gone. But in order to secure the business, we had to continue working this way for about 2-3 years.
Understood. So this is a sale transaction. Any purchase transaction with any related party?
No, no, no.
Okay.
It's
And
only,
here,
and that's only a sale of service. There is no other exchange of goods or anything.
understood. And is the gross margin similar with Vardhaman vis-a-vis the external parties?
No, we are taking maximum margins here at Namo.
Understood.
Yeah.
Okay. And sorry, last one more question. Is there any additional land available at lithium plant or Hyderabad plant for future expansion?
Uh, there is enough room for capacity expansion in both the facilities. So right now we have only taken permissions for working in a single shift. We can enhance the capacity by working 3 shifts or double shift. So there is
Understood.
enough scope of expansion within the current infrastructure.
Okay. And in your investor presentation, you mentioned about growing 45 to 50% CAGR for next 3 years. Will we need any additional capex for that growth, or will it be done through our existing capacities only?
See, the only thing that we are planning right now is, as I mentioned in my opening remarks, is about the extraction of critical minerals from black mass. So that is going to be further upgradation to our technology. Right now, we are only producing black mass and metals like copper, aluminum, iron. So that has to be, we have to get in a hydrometallurgy technology, which is like not very easily available. It comes expensive. Only very few companies globally have been successfully doing it. So we are exploring that option, and I don't think in near future we would need more capital towards any further expansion apart from that.
So this 45 to 50% CAGR is considering that new technology tie-up or without that tie-up?
That is what we have, what we can claim till today. That is not accounted. The future
Okay.
plans are not accounted in this.
Okay. And any guidance on capex for that new technology, approximate range which you focused?
See, it could be around $2 million to $4 million.
So, Harshil, that is the reason we
Or
are evaluating various global tie-ups, because they might happen. It might happen through a JV, and where we have, because manpower and market are known to us, there could be, 70-30 participation or 60-40. All these technology and these things are being explored currently, because we definitely want to be a player which can, extract critical real matter minerals from black mass also. So all these things is currently, talks are going on. There are different
Hmm.
technologies. As and when, we are able to freeze something, we will have to mandatory report it to NAC, and of course,
Hmm.
all of you will get to know about it.
Okay, sure, sure. Thank you. That's all from my side, and thank you for patiently answering all the questions. Thank you.
Have a pleasure.
Thank you, sir. Next, just a quick reminder for everyone. Participants are requested to raise their hands for the question. Also, one can request the question in the question box. Next, we have Mr. Yamnak. Sir, you may now ask your question and introduce yourself. Next, we have Mr. Nihar. Sir, you may unmute and introduce yourself.
Yeah, hi. Hi, good evening. Am I audible?
Yes, sir.
Yes.
Okay, great. I think a great set of numbers, and the forecast looks great. I have a couple of questions. I'm first is assuming that your the Nashik plants goes fully operational and so does Hyderabad, what will be the breakup of revenue from effective 2027? So what kind of, what will be the percentage of revenue contributed by from lithium and how much will come from e-waste?
So we are anticipating a 40-60 revenue split by 27. 40% would be coming from battery and 60% from e-waste.
Okay, and knowing that battery has got higher price, would that translate into better margins?
Uh, It can actually. We are trying to optimize, in terms of battery also. So as we said, we are looking at further, improvement in the procedure to, add more technology for black mass refining. But yes, these margins can improve, once also with our, upcoming Hyderabad facility, we'll have more cost optimization in southern India. That has been really affecting our P&L because we are getting a lot of raw material from south of India. But
Okay.
yes, right now what we have a clear visibility is about 18 to 25% margins on battery.
And e-waste what will be the margins of e-waste?
That is around 15 to 18%.
So in that case, if I, if we, I'm just kind of at a high level, if we kind of do a proportionate weighted average, then then the margin should actually expand when we are running at full capacity, say from FY27.
Yes, we really hope.
Okay. And another question is, the government has come up with a fixed price or better pricing to kind of from an EPR standpoint. So is that already effective and I mean, first is, yeah, is it effective now?
No, this is effective, but many producers are not adhering to it. They have rather gone to the court, and I think the case is, under hearing. We should be expecting, a decision maybe later this month. There are a couple of hearings which has already happened, but at this moment, we had already mentioned in earlier calls, we are not entertaining any business which is below the minimum price because we are a company which believes in doing the business ethically and also by complying with all the regulatory requirement. So CPCB had come out with the minimum rate structure last year. We are currently doing business only on those rates. If the business doesn't come, we are not entertaining it, but we don't want to defy any rules regulation and later on being questioned upon that.
Okay. So just kind of extending this, this question or topic, then I assume most of the, the big technology companies or the hardware providers, they would be working on the EPR rates.
Yes,
So
majority of the big companies, who are like committed to sustainability, who are also committed to their image. So these are the brands that are easily complying with the government. But there is resistance from the big producers who are selling millions of tons of their product in the market. They have shown bigger concerns, not the bigger MNCs.
Okay. And the another question and just two more questions. If the operation currently is only in one shift, uh, is there enough demand in the market for this to, scale up to two shifts or three shifts?
See, absolutely. And again, we are reiterating what we have said in the past that in our business, the limitation is not on capacity expansion or enhancement or working multiple shifts. The challenge is always the sourcing of raw material. That is the reason why we have to go to different parts of India, establish a facility in order to conquer the local sourcing. So, I mean, we can definitely have multiple shifts once we are able to collect that much of material from the same geography.
Understood. Understood. Last question. Last question is, if the the revenue and margin profile is better on battery lithium ion, then why not, put more focus on that versus e-waste?
Again, availability of raw material.
Okay, fine. Great. Thank you so much. Thank you so much. Appreciate the answers and all the very best.
Thank you, Nihar.
Thank you.
Thank you.
Just a quick reminder, participants are requested to raise their hands for their question. Also, one can request the question in the question box. Next, we have Mr. Saket. Sir, you may unmute and introduce yourself.
Yeah, hi Akshay, am I audible?
Hi, Saket.
Yes, yes.
Yes, you are.
Okay, wonderful. Good growth and overall trajectory of the company is going quite well now. I think I would like to continue with the earlier participant question with respect to the lithium ion plant. You said the availability of raw material is a problem. What is the problem there? If you can share more thoughts.
See, the problem is most of the material flows through the informal sector in our country, and that is why the material collection channels, the sourcing channels, are not defined very well. So we from our household, it gets picked up by a kabadi wala, then it goes to an aggregator, then it goes to an informal recycling, and from there it is coming to the formalized recycling facilities only after EPR. Even before EPR, even that wasn't happening. So because of this flow in the downstream of this raw material, sourcing becomes a challenge.
And also to overcome that, we have strengthened our business development team. We have and Akshay also mentioned his opening remark. Currently, we are targeting all the OEMs directly so that we can reduce our dependence on the scrap dealers and start procuring it material from them on a long-term basis. So currently, our entire business development team is working to build those relationships so that we can start getting material on a regular flow, and then of course we can do one shift, two shift, etc. Once we have established funnel for supplying of the raw material.
Noted. With respect to your subsidiary, I think you only have one subsidiary as of now, Tech Eco Waste Management.
Yes.
And it's a company, right? Earlier it was LLP, now it's a company, correct?
It is still a LLP only.
And almost we have 99.9% stake, correct?
Yeah.
Okay. What the business of that particular subsidiary is, one part is lithium ion battery recycling and the other part?
Other part is e-waste, and it's a e-waste company.
So what do you do in e-waste in that particular subsidiary?
So normal e-waste handling, processing of all consumer durables, laptop, IT, everything, same thing what we do in Namo here in Faridabad plant, the same thing. Because earlier it was working as, we had three plants. One is in Faridabad, that was the oldest one. Then in 2019, we set up another plant to have our presence in the Western market. And that's the reason we came up in the Nashik, right? And then third plant we have set up in Palwal, which is again in Haryana. So these three are independently working on, e-waste processing.
Okay, and FY25, the revenue of subsidiary was around 32 odd crores, 33. The PAT, as you mentioned, was around 101 point some 2 crores. In this last 6 months, or the results ending, how is the trajectory there?
So it's showing very good growth. Last 6 months, in fact, compared to 16 odd crore in the first half in September 24, this year it is 28 crores. That's also doing very well.
And the margins, roughly, PAT margins?
PAT margins are more or less same only. Slightly lower, I would say, but then they're also improving.
Okay, so no economies of scale, better economies of scale happening here.
Yeah.
Why? A bit is expected, right, sir?
Sorry, but currently when we have a TechEco subsidiary that is taking care of business of both battery as well as e-waste, right? Of course, the battery thing, the investment has happened, and the results have just started coming as the plant was operational only in July. But all the hiring expenses, everything is already gone there. So that's reason PAT margins were little lower. But now it's going to improve because now the plant would be operational for full 6 months in this half year.
And also, Saket, we do most of the value addition business from the Faridabad facility. For example, all the exports related to PCB and the precious metal, that is done from the Faridabad facility. So the entire material from Nashik, after recycling, for upscaling, it comes to the Faridabad facility. And from there, the final sale of metals is done.
Understood. So out of 28, what would be the share of Leon batteries?
Around
maybe 6 to 7 crores, kind of.
I would say 20%.
20%, yes.
Yeah.
Assume here?
In July, around July. So now in the next 6 months, it is going to be like the numbers are going to come in full flow.
Noted. So last question regarding this subsidiary, for example, on a sustainable basis, what could be at optimum utilization, not the full utilization per se, revenue and PAT, roughly what is expectation from this subsidiary, not from your other company standalone business?
The expectation is, of course, all the lithium-ion business, the battery business that is coming, that is going to come from the subsidiary only. And e-waste wise, it's gonna grow at 30-40% CAGR. That has always been our plans for last so many years. So we are definitely looking more positive towards this company now, as the more and more battery business is going to come from there.
Understood. Just help me out on the context part with respect to this particular subsidiary. I'm just trying to understand the growth trajectory and the business that will be here. Shall we expect at optimum utilization around 75-80 without going into further capex?
Absolutely.
And the PAT margins roughly around 5%?
So that will improve.
That will improve. That is going to improve.
Because the battery business is 18 to 20%, and there's a larger competition. So PAT margin there also would be around 8 to 9%.
Noted. So at 75-80, your rough bifurcation between battery and e-waste would be?
So I think Akshay already answered it. By 2027, we are looking at 40-60, 40% revenues coming from battery and 60% revenue coming from 4 plants of e-waste.
Noted. Okay, I'll get back in the queue. But yeah, really doing well. Wishing you all the best.
Thank you.
Thank you for your wishes.
Before we move to next question, I would now attend the question and answers box for the management. So first question is from Jayesh Shah. As e-waste management rules evolve and the producer responsibility framework gains traction, how is Namo positioned to defend its market leadership against the influx of new licensed recyclers and expected to enter the formal sector? Akshay sir, Sanjeev sir?
Akshay will answer it. Akshay?
So, see, as the e-waste rules are evolving, yes, of course, there are new people coming into the business. But we already have, we have established our presence and we are working from Pan India. We have collection centers. We are going to have different plants in different geographies of India. So there is a lot of cost optimization, firstly. Now, a lot of this EPR business, it is a compliance-based business. Where you have to deal with the Central Pollution Control Board and subsequently all the different state pollution control boards. You have to file returns and get the credits done, timely credits, and then online the annual returns, quarterly returns. So a lot of regulatory work that goes around with the EPR framework. It is not just the direct sale and purchase of credits. So the brands, they always look for a more trusted partner. In fact, the current court case that is going on, where the government is, helping us to get the right price for EPR. This is all working in favor of people like us who are already established and they have, the entire mechanism where you can check our process. where you can, we are giving proofs of recycling and proofs of how we tackle the entire e-waste. So I think this is going to put us in a commanding situation where when they compare us to a new recycler, we have more bases.
Okay, got it. Hope Jayeshji, your answer is answered. Question is answered. Now we'll again get back to the queue. Prisha, you can take forward.
Next, we have Mr. Kaushal Sharma. Sir, you may unmute and introduce yourself.
Hi, sir. Heartiest congratulations on your good set of numbers. This is Kaushal Sharma from Equinox Capital Venture, a family office. So my
Thank you,
question
Kaushal.
is on your recent Nashik facility that we are producing currently intermediate like black mass, as you said. So who are our key customer of black mass currently? And earlier the company was planning to export said intermediate from lithium-ion recycling, and recently the government has restricted the said export and imposed a ban on exporting black mass. So, do we have further plans or capability to move one more step further in recycling so that we could produce more intermediate that may become a potential market for global?
So Kaushal, firstly, there is no restriction on the black mass. There is restriction on particular declaration. So now it is regulated, and you have to get the export permission from MOF, which we are already in process. We are already in process for that. So we will continue to explore black mass export options when available. So right now we are also selling our black mass locally. There are multiple companies working here. There are global companies that are operating in India who are actually buying black mass locally, and then they are exporting it or on their own. So this is not a restriction. It is just regulation.
So locally we are selling to the companies. They are exporting to the customer.
Yeah.
So do we require any kind of approvals or a license for that?
Yes, we require an export permission from Ministry of Environment Forest.
So don't we have currently, or
No,
have
we
we
have
applied
applied for that. It wasn't required because black mass was going out before without any permission, without any statutory requirement. Now that the requirement is there, we have already applied for it.
Okay. And sir, what is the recent development of the case filed by global giants of electronic producer against the minimum price of EPR filed?
Sir, the verdict now only has to be delivered. They were supposed to get it on the last date, but the case couldn't come through. Now it is just pending for decision. I think the verdict has to be out in next hearing, whenever case gets on table.
Okay. And sir, as you said that our peak potential from this 12,400 MTPA is around 180 to 120 crores at 60% capacity, or it is 100% capacity, this kind of revenue?
At around 60-70% capacity utilization.
This is our
70,
optimum
70%.
capacity. Okay.
Our
And
optimum
it is in,
capacity could be double than that. Yeah.
okay, optimum is double. It is in single shift, right?
Single shift, yes.
And sir, could you please provide a breakup of this 87.32 crores of revenue H1 financial 26 in our key segment,
Yes.
EPR, recycling?
So out of 87, we have done only 10% in EPR, as EPR is usually more prevalent in the second half of the year. It is a compliance based business. And so most of the companies, they try to fulfill their EPR targets before 31st March. And that's the reason these numbers will look far better from this in the next half. So for current 87 crore split, we have done 10% from EPR and consultancy and these kind of services. Around 60% has come from recycling operations, sale and purchase of metals and scrap plastic, etc. And around 25% has come from refurbishment revenue, refurbishment business.
Yes, sir. And sir, could you please tell me about your input-output ratio? Like we are producing black mass currently. So what kind of realizations are we doing from the black mass? We are procuring around INR 300 per kg battery and
Yeah.
realization is 600 per kg. So what is in general the input and output ratio?
So normally the battery is sourced at 300. Black mass we are selling at 450 rupees. So and uh, around for 30 rupees per kg is our fixed cost, including overheads and everything, and then rest of the variable cost. So again, that would come to a margin of about 20-25% gross margin.
20 to 25% of gross margin, and the EBITDA is more or less 15 to 18%, right?
Yes.
Okay, sir. Thank you very much and best of luck for the future.
Thank you.
Thank you.
Just a quick reminder for everyone. Participants are requested to raise their hands for the question. Also, one can ask their question in the question box. Next, we have Mr. Harshil Bhayani. Sir, you may unmute and introduce yourself.
Hello. Thank you for the opportunity again. Can you hear me?
Yes,
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 Harshil.
Harshil.
Hi.
Yeah, hi. My follow-up question is, what would be the e-waste TAM in India and our market share in that? Since you mentioned that we are now the largest e-waste recycler by capacity. So what would be our market share?
So we said we are one of the largest in terms of the pan-India presence. There are a couple of recyclers who have got just one facility, but I think the for the efficiency part of and logistic cost perspective, it is better we have a spread out business model. We so it's very difficult to predict as such, but then market is talking about 3,50,000 or 4,50,000. That's the number, but this number is never authentic because 80% of the business is done in e-waste through the informal sector, and where the numbers do not come into this thing. But our market share would be close to about 2 to 2.5%, kind of, and which will go up to about 4% when we are operational with the Hyderabad facility.
Okay, so 2 or 2.5%, including the informal or excluding the informal sector?
So again, this data comes, through the CPC, which is a regulatory body that we are currently doing this much of business. So the source remains same, and from there, I'm just, thinking that how much do we process and recycle? That percentage is mentioned there.
Okay. And are we seeing any trend of OEMs shifting from informal to formal, or are they price sensitive and continuing with informal sector?
See,
OEMs,
they are
yeah.
price sensitive when they have to be. But yes, with the proper enforcement of laws, I think they are very well aware that they need to now follow international compliance standards when they are working in India. So, and yes, let me give you an example of the Chinese companies. They are absolutely complying with all the majority of the Chinese companies that we know. They are all complying very well with all the requirements. It is only, there's some big companies who are trying to, uh, create these hurdles, but they are also aware that sooner or later they have to actually uh, go as per the international standards in India also.
Okay, understood. Okay, and last question, any plans to list on the main board in the near future?
Well, let's be, 700, 800, crore revenue company, and then we will do it. So, which is about 2 years, 2.5 years from now.
Okay, sure, sure. All the best. Thank you.
Thank you.
A quick reminder to everyone, participants are requested to raise their hands for the question. Also, one can request their question in the question and answer box. Next, we have Mr. Jigar Jani. Sir, you may unmute and introduce yourself.
Yeah, hi. Am I audible?
Yes, Jigar.
Yeah, hi. Congratulations, sir, on a great set of numbers. I'm Jigar Jani. I am a research analyst from the Nuvama PCG team. So I am a bit new to this company, so pardon me if the questions are a little bit basic. The first thing is in terms of sourcing strategy, how much do we source both for e-waste and lithium-ion direct through scrap dealers, and how much do we directly source from OEMs? That's my first question. And I'll ask my other questions post this.
So we are sourcing about 70% directly from the companies. Around 25% of the sourcing comes from aggregators, and 5% sourcing is directly B2C.
So 65% is from companies, you're saying?
Around 65% is from companies, yes.
Okay. And this is the same mix for lithium-ion as well?
For lithium-ion, I think currently around 80% sourcing is directly from the companies.
Okay. And what kind of batteries are we sourcing in lithium-ion right now? It is what, mobile or EV? What kind of batteries are we recycling right
See,
now?
majority material that we're getting right now is from EVs, but those are again cheaper. So in terms of revenue percentage, that would be a 50-50 split between mobile phone, laptops and EVs. So mobile phone, laptop is one category and EV is one category.
Okay, so 50-50% in terms
By
of
revenue
volume.
split, but by volume, automobile batteries, EV batteries would be around 70% and 30% is others.
And your realization is similar once you have processed it and sold it in the market, right?
Yes, yes, yes.
So it makes more sense for you to procure EVs rather than mobiles and
Well,
normal.
can't really say that. It really depends. I mean, we are happy both ways. We are happy to produce, black mass as we have a high capacity equipment, and we are not able to run it to even 50% of efficiency right now. So we are happy either ways. We have a consistent margins on these batteries.
Sure. And does the technology differ depending on what type of battery you are using or the process?
No, the process differs. Process
Oh,
differs. That the time that taken for the process to complete that differs, but the equipment remains same.
sure. Great. And secondly, I'm just going through your presentation. So currently, I think you have 42,900 metric tons capacity. This is, I believe, inclusive of the new Nashik facility for lithium ion.
Yes.
Uh, uh, and you are adding another 25,000 tons, right?
Yeah.
Correct.
But the new capacity expansion that you put in PPT is 72,900. So that's about a 30,000 ton addition. So where is the 5,000 metric ton
No,
expansion?
no, I think it is 68,000. I don't know where are you reading 72,000. Let me check. It was 68,000 something.
Okay, because the expansion where you have mentioned
Hmm.
manufacturing facilities, total capacity by Q4 FY26 on slide
Let me.
17, it says
Hmm.
72,900. So just wanted
No,
to
I
check.
think there's a wrong figure. It is 66,000 something.
Oh, okay, understood. And sir, lastly, on this new
Actually, I figured out what you are saying. That is the amount of e-waste we have recycled till 30th, till March 2025. The number that you have just mentioned, 77,000.
no, I'm saying on slide 17, total
17.
capacity by Q4 FY26 is mentioned to be 72,900 metric ton. So if you could, I mean,
I
I
think
believe that's 5,000 more. So I think that seems to be some typo, if not, I'm not mistaken.
Yeah. That's a typo. That's a
typo.
typo.
Hmm.
We'll
Yeah,
get
Hmm.
it corrected.
yeah. Okay, great. And this, uh, uh, I sorry again, you might have mentioned this in the opening remarks. What is your capacity utilization in e-waste and in the lithium-ion capacity?
In e-waste, we have a capacity utilization of about 60%, around 60%. And battery, we have just started, so really can't comment, but we are looking at a 30% capacity utilization by the end of this financial year.
Okay. And by the time this Nashik facility ramps up, I think the Hyderabad facility numbers will come in from FY27 onwards.
Yes.
Okay. And by when do we expect this Nashik facility battery waste to be completely utilized?
It is completely operational now. We
I
just
mean,
have
full
to wait for the
utilization.
March result. It is like in 100% utilization, you mean?
I mean, the optimal utilization, it might be 70-80%.
That would that would be, I think, in 27 again. S- tw- uh, Maybe first quarter of the year 2028.
Okay. Okay. Understood. And there most now your expansion and your ramping up is mainly on lithium ion. So e-waste, you're already at 60% utilization. So no plans to add anything there, or it's still on the drawing board. And because I believe you said in the
No,
call
no,
that.
Hyderabad plant is there. Hyderabad plant is specifically for e-waste. There is no plans of battery in Hyderabad plant.
Oh, okay. Sorry, I might have misread it.
Yeah.
Okay. Okay. So this is for e-waste. Okay. Okay. Understood. Great. Thank you so much, sir, for answering my question. And sorry if my questions are a little bit basic.
Thank
Thank
you,
you.
Jigar.
Okay.
Thank you.
Thank you.
A quick reminder for everyone, participants are requested to raise their hands for the question. Also, one can request the question in the question and answer box.
So I believe there are no further questions from the investors. We will move to chat box question. So we have a question pending from Mr. Mayank Agarwal. EBITDA margins have expanded to around 12 to 8% in H1, which is a good improvement from last year. Can you explain what are the key drivers that supported this expansion, and conversely, what are the variables that could impact margins going forward? Akshay sir, Sanjeev sir, you can take this
Yeah.
question.
So EBITDA margins, if you look at it, EBITDA margins have improved by 272 basis points. I think there are two factors to it. We have witnessed the reduction in cost, logistic cost, finance cost, etc. Because we got the money through the IPO as a part of working capital. So there is on cost side we have been able to reduce it. On the other side, we have been able to increase the percentage of refurbishment, which is a high volume. That percentage has gone up, and just because of better pricing and better EPR rates, etc. Our margins have also improved on both the sides. It's a combination of both improving the efficiency, reducing the cost, and also doing better margin business. Which we from the last year.
Okay. Another question from him is also, what would you consider a sustainable steady state EBITDA margin for the business over the next 2 to 3 years?
So we have mentioned it that we are looking our EBITDA to be in the range of 13 to 15% by bringing in more efficiency and doing quality work. That's what we are looking at, 13 to 15%. Further improving it by 200 basis points. That's what our current forecast is.
All right. Hope Mayankji, your question has been answered by the management. Now we have pending question from Mr. Bhavesh Rathod. With the Hyderabad e-waste plant targeted for H2 FY26, what are the major execution challenges or regulatory dependencies, and how confident are you about the achieving the commercial operations within the fiscal?
So it's a fourth e-waste plant which is being set up. So we have track record of building the plant and taking all the necessary approvals. We are not a new in this business, so we are very hopeful that we should be able to procure all kind of regulatory requirement. Also, we are a listed company. CPCB also knows it very well that we are doing this business for the last 11 years. So we don't anticipate any kind of challenge in terms of getting any kind of approval. And as far as the current status is that construction is going on. We feel that it should be completed by February, March, and all these requisite approvals for doing the business should be in place by 31st March. Next year, we should see a contribution and increased delta from this plant.
All right. Hope Bhavesh ji, your question has been answered by the management. We have another question from Mr. Amir Rizwan. Shall we see a transformative shift from informal to formal player? If yes, then specify the reason behind.
Akshay, you would take this?
Sorry, I didn't get the question. The Amir Rizwan, shall we see a transformative shift from informal to formal players? If yes, then specify the reason behind. Yes, the rules that have come out is it has been very encouraging for the informal sector also. The main motive of e-waste management rules and the whole EPR program is actually to motivate informal recyclers to get into formalized mechanism. Now, these informal recyclers, they don't have a direct capacity to go out and establish an e-waste recycling facility. So it is always better that they and us work together in tandem and they become a part of our collection network, and they give us that sourcing of raw material, and then that can be processed in our facility. So that is the shift that has been happening for last 5 years, but with proper regulatory work and with more intent from the government, this is going to transform much faster.
All right. Another question from Mr. Rizwanji is what is the competitive edge in our business?
See, the competitive edge in our business is to, the proper identification of metal, the proper calculations, what is the amount of different metals in different scraps, the entire networking that we are also exporting our black mass, we are exporting printed circuit boards. To overall to have a proper integrated value chain is required in order to, run this business, and I think this is where we have our edge.
Okay, hope Rizwanji, all your questions have been answered. Another question is from Mr. Nagendraji. Could you please share current capacity utilization plant-wise?
Yes, so Faridabad plant, we are utilizing 100% capacity. Palwal plant, we are utilizing 35% capacity. Nashik e-waste plant, we are utilizing 55% capacity. And Nashik battery plant, we have just commenced.
Okay, hope Rizwanji, your questions are also being answered by the management. Another follow-up question from Mr. Bhavesh Rathod is how concentrated is your current sourcing mix among the key OEMs or aggregators, and what's your strategy to reduce dependency risk on pricing pressure from large volume suppliers?
So, as we have mentioned, our current sourcing is about 60-70% from the OEMs and around 25-30% from aggregators. And there is only less than around 5% or less directly from the consumers. So, I mean, many of the OEMs that we are working with, they get into a long-term agreements with us, and also the pricing is based on the prices of commodity, the metals on London Metal Exchange. So there are proper indexes referring to those. There are benchmarking of prices is done for different kinds of raw material.
All right. A short follow-up question from Mr. Jigarji. How much of your raw material sourcing is through imports, segment-wise for both e-waste and lithium-ion? Is there any difference in pricing in domestic sourcing versus imports? Also, how much of your sales are exports?
The answer is zero. We are not importing any e-waste or lithium-ion battery scrap. As of now, this is highly regulated in India, and e-waste is completely regulated, not allowed at all. Lithium-ion is regulated there. We are allowed to import, but on very, very tough conditions, and that is why practically it's nearly not done in India. So both the options for imports is currently closed.
And export would be close to about 3 to 4% percentage of export out of the total revenue.
All right, sir. Hope Jigarji, your question is also answered. And I hope there are no further questions and we can conclude the call for now. With this, I would now hand over the call to Mr. Akshayji for his closing notes. Thank you, and over to you, sir.
Thank you so much, everyone, for joining this call. It is always our pleasure to have this moment to interact with our investors, stakeholders, and of course, our potential investors. I think it really gives us strength, your encouraging words, and every time you have cheered us whenever we have presented good results. So I would like to thank you all again for your continued support and just wish that together we grow this company and we make it a leader in e-waste and battery recycling in India. Thank you so much for joining us today.
Thank you. Thank you all.